Good morning. This is Nick Rach with the Earnings Scout, and today I'd like to walk you through our sector earnings and estimate trend report that we issue every Tuesday. You can see here on the first page, we quantitatively rank each sector, where healthcare and materials currently rank near the top, while utilities, industrials, and consumer discretionary rank near the bottom. We also, in this report, show how the trends have been moving. So you can see where the basis for our rankings come. We're measuring the rate of change to the earnings expectations relative to the price movement, and then scoring those aggregated out. You can get all this information in the report that gets released every Tuesday. Now, you don't need to wait for this information Tuesday. We update our client portal with this data every Saturday morning. The numbers get updated and refreshed. I will say this, if you're managing just in portfolio of ETFs, and we have many clients that do so where they actively manage passive ETF strategies, just these sector rankings alone are enough for them to utilize how they want to rate, rank, and weight each sector in their portfolios that they manage. Now, if you're managing individual securities, you're going to need more information that you're going to get access via our client portal on. For example, within the healthcare sector, we can find what are the best industries, and then among the best industries in the healthcare sector, where are the best companies at earnings trends. At a click of a button, we can find this for you. So I'm going to turn you now to our client portal, and I want to open that up at earningsscout.com. And we have given you a login and password. And if we have not, I want you to contact us so you can get that, so you can check out the site here. In the login, when you go, I want you to go to the research tab under the screening, under drill downs, and then drill down by sector and industry. And here you will see the ranking system that we have. Now, you can sort this list just by highlighting the top of the column, and you'll see healthcare is near the top. Now, amongst the healthcare industry, what are the best industries? We can rank those as well, and we can see the scores here. Aggregated healthcare facilities, we believe objectively by measuring the rate of change to earnings expectations amongst all companies in our database, what we see is that hospitals and healthcare facilities score the highest. Now, which ones score the highest? We actually have at a click of a button. The ones that scored highly. Now, I want to turn your attention to Universal Health, which is UHS. It scores an 87. Now, anything we rate above an 80, we rank as a buy. You can see the 87 score here. Now, why do we score this so high? Well, the earnings scores, which we measure the rate of change here of the overall earnings expectations for UniHealth, have been going up at increasing rates. And after Universal Health last reported here in second quarter earnings season, it had its next quarter, multiple quarters and annual estimates raised at a rate of roughly 19.91%. So we draw in the trend line, this slope here. This is one thing that we're ranking. That's measuring the second derivative rate of change to the earnings expectations, which says over the past year, the expected profitability for Universal Health keeps getting better and better. And you don't have to just look at over the past 1 year. Here's the 2-year trend for it as well. We can see that on our data just by clicking the 2-year button, update the chart, and look at it here. 2 years ago, Universal Health's estimates were being cut at a rate of 6.28%. Now they're being raised by 19.91. This company has solid earnings revision momentum. This is why this stock has doubled in the last 2 years and why we've been recommending it as well. You can actually go under our indicator scores. This button right here will show you how we've been ranking this stock over the past 3 years, where we said to buy the stock at 127 and on. Now, if you want to see over the past 5 years how we've looked at this stock and how we've rated it, I'm going to take out the earnings indicator movement here just to see where we've been saying to buy it, such as buy it at 112. Then we said to sell it at 151 back on July 16th, 2021. And then we were out of the name until we noticed the revision trend staying positive again. and then we got you into this name at 127. So we got you back in at 127.10 on March 31st, 2023, and we've been in it ever since after selling it for at a price of 151. So this is how you can find things really quick on our website. If you want to find the best companies within each industry, within each sector, you can also manage your portfolios on here. And if you have any other questions regarding how to use this drill down, how to find names quickly, because this is going through tons of information. And not only that, if I go back in here, Universal Health was one that we really like. Do we like all healthcare facility companies? No. If you go down the ranking here, there's things like Acadia Healthcare, ACH, uh, HC, that has a 35. Now, what is a 35 indicator score? Why don't we favor this name as much? Well, over the past year, Acadia's healthcare earnings estimates were going up at a rate of 4%. Now they're getting cut at a rate of 2. The trend line here shows the expected profitability weakening. This is why we rank and score this one lower. It has less favorable earnings trends relative to Universal Health, and that's in the system that you can see really quick there. Again, to do this information on your own would take a ton of time because we just went through a year's worth of data, and we can go through 5 years worth of data in a click of a button for you to find the companies that have the best prospects relative to their sustainable earnings revision trends for you. If you have any questions, please get a hold of me. Hopefully, this was helpful to you. And if not, get a hold of us. Bye.